good afternoon. You're watching Closing Trades on ET now. I'm Anisha Jain. With me is Ajay Sharma. And for now, the market is holding on to good gains in the sense that yes, we have let go of the mark of 24,000, but can't complain after the kind of rally we have had this series. Remember, today is the last day of the series, and the Nifty has managed to conquer almost 6 to 7% in this series alone. The star performer clearly has been the banking space. Today, it's retreating a bit, but still for the entire series, it's clocking in a gain of almost 8.5–9%. So that's something which has definitely gone down well. In fact, individual names, the likes of HDFC Bank, etc., have managed to report double-digit growth in a month itself. So that's something which has definitely been taken well by the street. These are mostly today's data. We should probably put up the 1 month data because we're talking about the series gone by, and that will give you a better picture. But in terms of today, specifically in terms of the gainers, it's clearly the cement pack. You have Ultratech Cement sitting with a gain of around 4%, but the bigger gainer, of course, is India Cement, wherein 23% stake has been acquired by Ultratech at a value of 267 per share. They're totally shelling out around 1,880 crore thereabouts. And that's the latest there. And other, cement companies, whether it's Grasim, which is of course an affiliate, or even other companies from the entire pack, is definitely active. We're watching out for LTI Mindtree. Remember, yesterday the management met with a few reporters as well. We did get the exclusive commentary from the L&T management as well. So that stock is up around 3.5%. Dr. Reddy's is reacting to the acquisition news. Route Mobile is in focus on account of one of the tie-ups that they have done with Microsoft. And a lot of stocks right from Manapura, Mazgaon, Suvin and Whirlpool being in focus on account of individual news flow. But I think it's a broader market again, Ajay, which deserves a mention because of the vibrancy.
Yes, you're right about it. But at the same time, I'm also taking note of the point of the gain on the losers side. At 24K, I mean, look at the small cap index. It has turned or nosedived because the urge, we've been talking about it since morning, that the urge to book some profits is also coming to the fore. Pull up the mid cap index, pull up Nifty Junior, and you would see that ample amount of profit booking is visible on these indices. So just because Reliance is doing well, so the Dr. Reddy's and Grasim of the world, Ultratech are doing okay. If it was not about IT, pull up all the 4 top IT gainers, you would see large cap IT is helping the index to hold on. But generally, there is some profit taking which is also setting in if you look at beneath the surface, beneath what the key indices are telling you. And why shouldn't you? You are looking at a 10–20% gain in this series alone in small cap, mid caps. Index and Bank Nifty, we know what they've done, very good gains. So some amount of profit taking. One would have expected with so much of positivity around going into the budget or post-budget, most of the strategies are saying some case for a profit taking, but at least the start is visible now. We've got Kunal Bothra, Nuresh Mirani and Sunil Subramaniam as well on fundamentals joining us to take the discussion forward on this edition of Closing Trades. Gentlemen, all three of you, thank you so much. Sunil, let me come to you because we are talking about, on the one hand, despite of everything, calls of valuation, global FI money is very patchy, all of that, but still we are slowly marching ahead. But from today onwards, do you expect some profit taking? Is that the message you are giving out to your investor fraternity as well? How are you scanning the landscape?
I think what Ajay has happened is that we've had consistent flows into mutual funds, especially from retail investors, right? And the SIP book has been growing month on month. But the composition of the flows was such that I think more than 50% of the incremental flows in SIPs are in mid and small cap funds, right? And so if you see from the quarter to date, right, from April onwards, FIs April and May sold 50,000 crores worth of assets. Okay, but mutual fund managers were not in a position to buy so much of those because the flows they were getting were in mid and small cap. So that's why you saw that the gap between mid and small cap and large cap into value kept widening. Now, post the election result, after the first few days of uncertainty around how will the coalition plan out, what is happening, a lot of comfort has come to the foreigners that the fear which they had in the run-up to the election results, right, where there was either they had their own opinion polls which gave them some feedback, or there was news around the rhetoric that the Prime Minister was employing. Something happened that they were booking profits then. So this outflow of 50,000 crores was actually profit booking by FIIs. Now, alternatives to take that money and put it anywhere else in the world is not looking attractive. So they had to come back to India. And once they got clarity that this government is by and large going to be a repeat of the last government, the ministerial setup is the same, that there are no undue pressures because of the coalition on the government, and that the budget is likely to be along a reform-oriented policy continuity line, you're seeing the return of the FII. Now, when the return of the FII is coming, is where now when you mention profit booking, who's doing the profit booking in mid and small cap is these fund managers, because now they see that with the FIS coming back, they are not fearful of buying those large caps because as long as FIS selling was there, they said, can we buy this a bit later? Can we buy this a bit later? But today, if the FIS returning, they know that good quality large caps, quality earnings, right? There, if the FIS are going to be continuing to buy, then it's good to buy in early. And the widening gap in valuations between the mid and small cap pack and the large cap pack means that for you, this is a wonderful opportunity to rotate it and bring down the average 1 year forward PE of your portfolio by buying good quality, solid, robust large caps. So I think the buying the large caps is going to be both from the FIIs as well as reallocating from this, because mutual funds and booking profits only do it to reallocate, because today they don't pay out massive dividends from mutual fund schemes because they are not tax efficient to do that. So when you say profit booking, it's booking from one segment and going into something else. Mutual fund managers are not holding big amounts of cash.
Let's go to Nuresh and Kunal as well. Gentlemen, Kunal, let me come to you. How do you read today's reading and then going sideways, at least 50-60 points lower from top on Nifty?
Yeah, good afternoon, Ajay. I think it's more of profit booking, which is there seen on the indices as well as on the individual stocks, because I think there's clear, balancing out, which is actually paying out for the index. Because on one hand, the IT stocks, which are the underperforming names, they are the ones which are moving up higher, and the likes of Reliance, etc., was holding up pretty well for itself. And on the other hand, you're seeing profit booking, which is coming back into many of the spaces and the metal stocks, etc., real estate names. So I think there are many stocks which are seeing some profit booking, but I would probably call it as more of profit booking. Now there are different textures of profit booking which happens. One is that because the run up has been exceedingly high, the expiry had been started to be very volatile, and it ended up to be much more stable expiry. So I think it's bound to be that the markets would probably want to take some chips off the table before going into the July expiry. But it doesn't look like as a major turnaround or a major negativity in terms of the price trend. So the bias still remains bullish. We may just expect that this could probably be the expiry day volatility which has crept in, and something which was amiss over the last many expiries.
So it's just the expiry related volatility, but a couple of spaces which are coming under quite a bit of pressure right now: fertilizers, chemicals and hotels. Let me put on board Indian Hotels, which is down 5%. Lemon Tree Hotel is coming under pressure. So a couple of these names in focus. Deepak Fertilizers is down 7%. FACT is down 5%. You also have Archean Chemicals as well as Chambal Fertilizers, GNFC. They're all down in the trading session. So some of these names definitely losing out. Nuresh, within hotels as well as these chemical names that I pointed out, would you look at buying any of the dips?
Dipping, a lot of these names are up 10 to 30% post elections, even higher than the exit poll dates. So if you were to look at a smaller fertilizers, they've gone up 20-25%. So they have still more to go. Out of these names, only Lemon Tree makes sense because that's a stock which has not broken out into a new all-time high like Indian Hotels, where the earlier high was 620, the stock went to 660. So a retest of 620 is where you would like to buy. So we are getting close to it right now. But it has already moved up quite a bit over the last 1 year. The stock used to be sub 400 a year back. So it's up quite a bit. So Lemon Tree is a relatively better choice in the hotel pack. In terms of fertilizers, I would still wait out for a much deeper correction to look at it.
Stay with us. We'll talk about individual areas in a moment. In fact, I want to touch upon a story, and that is the Commerce Minister and Industry Minister have met a set of exporters, and the idea here is to review the situation. My colleague Sumit will join us shortly. But Sunil, out of all these export-oriented manufacturers, be it capital goods, some of the mid-tier engineering exporters, you talk about auto, of course, is part of that, but apparel exporters. How are the numbers stacking up beyond the domestic demand? Have we managed to really achieve meaningful ground as far as our exports scene is concerned? Because we've been trying to do that for years now. Policy direction is also very clear about it. But is any meaningful progress happened on ground?
I think that it's still a long journey, Ajay, because I think what the success initially is most of partly driven by the PLI stuff. And within the PLI stuff, because of the incentives that we're getting, but we are still quite a way behind China in terms of productivity, in terms of, though labor costs look reasonable compared to China at $1.6 per hour, China's at 4.2. It looks superficially, cheaper, but bear in mind that China's per capita GDP is 6 times ours. So I think that what we are getting in the export success is at the low end, low skilled labor kind of exports. And that's where we are seeing significant gains in electronics and some of the other sectors you mentioned. So I think that the long journey to go, and I think the productivity levels need to improve, the skill sets need to improve. I think the government will need to do something on land and labor reforms, maybe make a start in the coming budget for really that export, on the manufactured space to shoot up. But at the same time, there's a healthy growth in the services exports because of all the, the fact that our data costs are the cheapest in the world means that a lot of data related work, management, consulting work is coming to India. So non-IT exports around the digital space are also growing very fast. The two successes then I would say are low-end labor-oriented PLI-driven exports as well as the data cost-driven services exports are the ones which are holding up and taking the export battle forward. But a long journey ahead of us, and the scope is phenomenal because I saw some data which said that only 14% of the 135 MNCs in China have looked at India yet. So there's a huge pool of people who are still making in China, which is seeing a decreasing labor population, which is seeing a higher cost of production happening there. And hence, I think the story is very bright for the future, but it's early days in terms of the growth.
In fact, let's discuss it. Where exactly is the story heading from here on? My colleague Sumit Chaturvedi is joining us now for more on this. Sumit, tell us about the meeting which Commerce Ministry, Piyush Goyal led Commerce Ministry is all set to have with exporters. What's on agenda?
Well, we have seen exports are coming under a bit of pressure from the last few months, and certain crises they are engulfing. They have engulfed, in fact, the world, including Red Sea crisis, container shortage. So keeping all that in mind, today meeting is going to take place a little late in the evening. Piyush Goyal, Commerce Minister, will meet exporters and hear about some of their demands as well. We know budget is near, so that some of the demands could be considered from their side as well. So agenda is first of all listening to the demands of exporters and trying to push if any help can be given from government side. Well, if we talk about exports, definitely India has a lot to export. It exports a number of items, but specifically over the last few months, gems and jewelry and leather, these are some certain goods that are demanding certain push from the government sides. And today we expect some of these sector leaders, industry leaders will present once again their demands before Commerce Minister Piyush Goyal, and he's going to listen to them. So this is the agenda of the meeting today that is going to take place a little later in the day. If I give a certain impact on the companies, what idea? The idea is let's give an idea of what kind of impact companies are having. Maruti Suzuki, 5,000 to 6,000 cars, they couldn't be exported because of Red Sea crisis. So other certain companies have also faced same. So all that will be discussed today.
To get us the latest once that meeting is over as to what the outcome is as well. But shifting focus to what's happening in the aviation sector, as we head into this small break, listen into what my colleague Samir has to say on the matter, because he does understand from his sources that there is going to be some sort of changes with respect to the new law coming in to make sure the aircraft lessors will be able to repossess the leased aircrafts in case the airlines go into the insolvency process. Samir, tell us.
The centre is likely to come up with a major reform in the aviation sector, and with this one reform, the government is also looking to address multiple challenges in the sector. So the Ministry of Union Civil Aviation, in consultation with the Ministry of Law and Justice, is likely to come up with a law, and that law will supersede IBC in case any airline goes in for insolvency. So the draft of the law is almost at the final stage, and it is likely to be introduced to come up for public consultation very soon, maybe before December this year itself. And this law will be in much accordance with the Cape Town Convention, of which India is also apart. Now, this law will help the aircraft lessors, since this law will supersede IBC, the insolvency process, and this will help the aircraft lessors to regain the or repossess the leased aircraft that is with the airlines which is going in for the insolvency. So this will help the not just the aircraft lessors to repossess the leased aircraft instead of getting it stuck in the insolvency process. So this will help the aircraft lessors, and also this will help the aircraft lessors to once again lease the aircraft to other airlines. So with this law, government is looking to address multiple challenges. For example, this will help to fill in the gap or narrow the gap of the demand and supply of aircraft. So the leased aircraft will be much more available to the airlines. Number one. Number two, this will also help to address the airfare issue. Government understands that with the more availability of leased aircraft, the airfares will be much more stable and will also be more affordable in coming days. And also with this law, government is understanding that this will help to build the trust and the confidence in Indian aviation sector. So this law, which is almost at the final leg, is likely to be introduced very soon.
Thanks very much for that. In fact, Sunil, with that, I'll let you go. But before we thank you, Sunil, I want to really make a point that you had a great association with us. We thank you for all your contribution on ET Now network and for the entire mutual fund industry by and large. Under your leadership, Sundaram has grown from just being a niche small cap focused kind of fund to a full service fund. And now that you're retiring very shortly, I wish you all the best. We will definitely be engaging more often for guidance, and thanks very much for everything.
Sure. Thank you, and all the best to you and to your viewers and to the channel.
Great. So that was Sunil Subramaniam. We'll take a short break. Nuresh and Kunal stay with us, but we'll discuss a lot of other interesting developments on the other side of the break.
Welcome back. Well, a lot of stocks bouncing around, even though the small cap index has turned into the red. It's Root Mobile, which is up 16%. Whirlpool is actually trending higher. India Cements, Manappuram, Swain Pharma, these are your big buzzers in the trading session right now. Separately, in terms of the losers, well, as I pointed out, I think it's largely chemicals and hotels which are coming under pressure. And if you really want to add, perhaps you can add real estate to the pack, because Prestige Estate is down 5%, Suntec Realty is down. You also have other names from that entire vertical which are actually coming under a bit of pressure. Well, let me take it across to Karan if he's ready to talk to us about the latest release which has been there. Kalki, and we've been seeing the trailers and all of that. Karan, it looks very, very impressive. I'm sure you've managed to watch it already. Tell us your feedback and what kind of estimates you have on the box office collections.
Hi Nisha, good afternoon. Haven't watched it this time around. I am not a regional movie buff, so I haven't caught up on this one. So I think in terms of box office broadly, I think the numbers are going to be very good as far as opening is concerned. It's one of its kind. I think this movie is a perfect blend of, star power, content, which is mythological content in nature, and also the VFX, right? So I think everything fits perfectly well for Kalki. So the opening definitely is blockbuster. I think the trade and the checks are indicating that the response to this movie so far has been mixed. It is not completely positive or completely negative. So the response has been mixed. I think we'll get to know over a period of time in terms of where the film heads in terms of lifetime box office. But currently, the opening number is expected to be around 110 to 120 crores, which is the gross box office domestic. And if you include overseas, the number could stretch up to 170 to 180 crores. One very key big motivation also for this film will be its performance in the Hindi circuit or the Hindi-speaking, Hindi dub version, because I think that is a big delta for PVR Inox, because they have got about a 45 to 48% kind of a market share in the Hindi market. But as far as regional markets is concerned, their market share is very limited towards 8 to 10%.
The valuations of PVR, are you getting inquiries about wanting to get into this stock? Because it does provide, pull up the chart and you would see that it does provide a reasonable amount of comfort. Hasn't done too well in a roaring bull run in the last 1 year.
See, there is comfort to valuations. There's no doubt about it. If you look at the valuation multiples pre-COVID versus now, we are at a 35% discount versus pre-COVID averages. But really, one can't forget the content cycle, the volatility we've seen in terms of content. across genres. Hindi genre obviously has not clearly come back on a consistent basis. Regional genre has been mixed so far. Of course, the share has moved up, but over the last 6 to 8 months, even regional genre has shown mixed signs. And if you look at the Hollywood content, I think that we'll see only start to see coming in a very strong manner post September, October, once the negative impact of the lighter association strike goes away. So from valuation standpoint, things do look to be very favorable. But I think Q1 performance is going to be quite muted for FY25 because we haven't seen any large ticket films doing well. IPL, World Cup, elections, all these things have been a dampener as far as Q1 occupancy is concerned. Q2 obviously will be better versus Q1, but I think Q3 will be the quarter to watch out for because a lot of the large releases have been pushed to Q3.
Since we have you with us, Karan, a quick word on this entire buzz of Orissa also becoming a dry state. Could you, throw some light on what could be the implication? Is it a confirmed news? Is it still reports? Which are the big players in that geography?
I think these are still reports. One should not read, too much into it turning out to reality. And if at all this does turn out to be reality, then I think, it's a negative for both spirits and beer companies. I think if you look at the beer volumes, about 2.5% of beer volumes comes from this state. And as far as spirits is concerned, the number is higher towards about 5 to 6% odd. And in terms of potential impact, UB will have a big impact here because UB is a market leader with more than 50% market share in Orissa. So if at all the ban happens, they will stand to see a bigger negative impact versus industry average in the range of about 2.5% as far as volumes is concerned. In terms of spirits, I think, ABD and Pernod are two players which have got a stronger or a higher market share in these markets. So broadly, it's a negative for both beer and spirits, but not much to read into it for now.
All right, we'll let you go on that one, Karan. Thanks very much for your time. That was Karan Thorani talking about exhibition space and the developments there. And of course, more important, the entertainment of the other kind, which is alcohol. But we'll talk about market, which is back above the 24,000 mark as far as Nifty is concerned. Beyond, there's a lot of interesting stuff happening there. Look at Whirlpool. There is no clear deal overseas, but Whirlpool has shot up 8%. Root Mobile is gaining 14.5. Naresh, you track any of these, Whirlpool or Root Mobile?
So I've been looking at Whirlpool. The stock was available at 2,700 post-COVID. That was the top it made pre-COVID also. And then it went all the way down to 1,200. So a 50-60% fall. And now finally a 2-year breakout done above the 1,800 mark. And what we've seen is everything in the consumer appliance sector, whether it is Crompton Consumer or Orient Electric, has done well. So the stock also had a lot of push coming in from the sectoral trend change. So for now, any dips back to 1,600 to 1,800 would be a buy. At current levels, it would not be. And closer to 2,300 to 2,500 would be a top for the stock. And that should be a selling zone. So for now, it's a time to look at other names in the consumer appliances pack. Even a Voltas on dips will still look more interesting.
In the meantime, take a look at Raymond. That stock has again managed to perk up. In fact, week to date, that stock has done quite well for itself. So right now, just moving towards that flat line. Separately, in terms of the other gainers, it continues to be Moscow Dog, Whirlpool, etc. But let me take the CT picks from our technical experts then quickly. Kunal, what's the closing trade idea right now?
So that will be a buy on Siemens. That's a chart which is starting to come back into a breakout mode. In fact, on the short-term basis, the stock has come back into or rather, it's taken a good support at the critical moving average on the hourly charts. And I think looking at the risk reward, the way the market setup is, I think these good names would probably start to do much better going forward. So Siemens is something which I would look to suggest at current levels.
Stock that Kunal likes. Naresh, what about you? What's your recommendation as a closing trade idea?
So that would be a buy on Manappuram Finance. The stock has finally come over the 205, 210 levels, which was the high this month. And also back in 2021, pre-COVID, this 200, 210 has been a major barrier. So if it sustains above that, that's an indication of a multi-year breakout. So would expect this to continue the momentum going forward.
Looks like that the 3 p.m. move has already started because of that up move that Ajay was just highlighting. But also remember the quarterly rejig is something which is scheduled for today. Even though no major volumes were expected, maybe that is also going to play a part in some of the stocks. We'll discuss that and a lot more when we come back after this very short break.
Right, so there's important stock to watch out for, and we told you about it early in the morning, and that is Eureka Forbes. Well, for last 3 quarters, the management has been giving out very interesting updates on the exchanges post their earnings, but they actually had a proper Eureka is gaining in trade. Is this 52 weeks? Pull up today's. That is where the actual is 6% higher. Yeah. I was thinking why it's losing right now. So the point is that they've actually had a physical analyst meet and met a bunch of analysts. And Renu Baid Pugalia, Vice President at IFL, was also attending that meet. And one of the notes were using the word the management sounded very pumped up meeting the analysts. Was that the case? I mean, yes, it's got a very good management quality now, but were they really appearing very pumped up, Renu?
Yeah, definitely. I think this was their first analyst meet, which they held after the entire team has been in charge for the last 18 months. So clearly a lot of excitement with the management, first formal interaction from their side. And things that they had outlined for year one, they have successfully delivered, both in terms of category expansion, growth, volume growth coming back in double digits, margin expansion, and operational efficiencies, and more importantly, strategic directions which they embarked upon. At least the management seems to be more comfortable that they're at the right track. So over the next 2 to 3 years, we should see them delivering on the story pretty comfortably.
Recommendation on the stock. Hi Renu, this is Anish also joining in the conversation on Eureka. What kind of targets you have? And I'm sorry if I'm putting you on the spot, but I would love to get your sense on this entire deal which is brewing on a global level between Bosch and Whirlpool. And if you had any comments to make on that back home.
Well, for Eureka Forbes, the target price has been 600 rupees, which is approximately 30% upside from current levels. And if we see the stock trades approximately at 40-41 times fiscal 26 earnings. So to us, the stock looks pretty attractive with very strong EPS CAGR of 45%, strong free cash flow conversion and balance sheet. So this continues to be among the top pick within the consumer electrical space for us. On the sidelines, as you asked, no specific comments on the Whirlpool buzz which has been going around. So we'll have to wait and watch how events unfold instead of just commenting something based on news rumors and floats which have been going around.
Renu, before we let you go, just a quick word on the management has. I want to understand the efforts and the steps the management has guided for margin management, improving the product mix, and going deeper into the country. I mean, I remember they put out a very nice map of India, how rural electrification and availability of 24/7 power is actually increasing the prospects of the products.
True. So for water purifier as a category to really grow and penetrate, this category really hasn't grown as a segment over the last 5 to 7 years, partially attributable to the external elements, rest to the players who themselves were just milking the existing market then. So the new team at Eureka, which took charge in the last 18 months, so the first at the macro level, there were facilitators at Government of India. In the last 5 years was very aggressive with respect to the Jal to Nal Yojana. So because of that, the penetration of tapped water connection saw marked improvement, in addition to ensuring there's 24/7 availability of power. So these two are the basic enablers which ensured that the target market of the TAM for the water purifier as a category looks interesting. So this is approximately a 44 billion category, and management expects this to become a 100 billion plus category in the next 5 to 6 years, which is where they're very confident. Not just, and the beauty of this category is extremely difficult to penetrate, has a very strong service income aligned with every installed base which you tend to create. So it's just not about drawing down on the first product sales, but also an aftermarket recurring income stream, which is unlike any other consumer electrical or durable category that we see. And in both of these segments, Eureka Forbes is very strongly present and positioned with its AquaGuard brand in the market to that extent. So clearly what management has highlighted is consistent investments in R&D and new product development, which will ensure that the pipeline of new products, both for the mass market as well as the premium segment of the market, remains pretty strong and intact. And in addition, they have a very good mix, distribution and GTM mix, which is a combination of D2C, which is very much unique to Eureka. In addition, in the last 2 years, they have very systematically increased their exposure to modern retail format, e-commerce, and other trade channels, which are catering to different segment of the end markets. So on a blended basis, they are targeting a much wider penetration in the affordable segment, expanding the reach and driving premiumization in the mass market and the mass premium segment of the market.
Right.
And at the same time, driving margins and operating efficiencies, which is combination of cost, pricing, and everything else combined there.
Okay, so a lot of factors coming together for Eureka Forbes. Thanks, Renu, for making time and speaking with us today. So that's the latest on Eureka Forbes. Clearly positive, and the management has been delivering on what they have been promising. But talking about promises, that's the time of the year. It's the time of the budget, and we understand that there are big promises which are being made with respect to what lies ahead for the power sector. Let me take it across to Prakash to get a sense as to what lies ahead for especially the transmission vertical. Prakash, hi, tell us what you're picking up from your sources.
Yes, we are learning from our sources that the government is likely to make some announcement for the power sector in the upcoming budget. We are given to understand that the government may announce a 50,000 megawatt capacity of the transmission projects, and the financial support would be provided by the government. Sources are informing that this is going to be part of the wider plan of the government for the evacuation of 500 gigawatt capacity of renewable energy projects by the year 2030. In addition to that, sources are also informing that the 4,000 megawatt capacity of pump storage projects are likely to be given approval by the government. Along with that, we are also given to understand that the Power Ministry has recommended to launch a new hydro policy for the promotion of hydro projects across the country, and a special financial package is likely to be provided for the promotion of hydro projects located in Northeast region.
All right, that was about 50,000 megawatt transmission projects, and some of the transmission companies like Skipper, like transformers, rectifiers, time and again are coming on our channel and telling us the massive growth which lie ahead for them, and they're adding capacity at hectic pace. Pull up the last 1 year chart, you'd see how TRIL and Skipper both have performed, and now 50,000 megawatt of additional transmission coming, 6.5 times already. How do these stocks look, Kunal, Skipper and TRIL?
So I think they've done pretty well for themselves so far. Ajay, I think looking at the recent charts for Skipper, when the stock trading, I think at 340.45 just recently, if I'm not wrong, last month or so, in the end of the previous month, the stock was almost at 270, 275, made a high closer to 380. So after a 30% rally, the stock has gone through a very mild correction, 7-8% odd from the recent highs. But I would believe that this is a very strong indication that the near to medium term trend for the stock is quite strong. It's trading above all the key moving averages. So I think that should keep the stock a lot more buoyant. TRIL also, I think on the longer term charts, it's hardly gone through a phase of correction. And the best part is that whenever the stock has come back towards the 50-day moving average, which, for example, currently the stock is placed at such a moving average, it's actually acted as a major support point for TRIL, and the stock has restarted a trend for itself post that. So I think on the back of it, both of the stocks, Skipper as well as TRIL, they look very attractive.
That's the verdict on some of the power names, and Prakash was bringing in that exclusive story about the big transmission projects that lie ahead. But let's shift the focus to the pharma sector. My colleague Asta caught up with the top brass at Dr. Reddy's to get a sense with respect to the acquisition that they have made. Listen in to what they told her.
So we are pretty excited about it. From a strategy perspective, it is something that we are really committed to consumer health business. We've also talked about how we looked at our joint venture with Nestle and other things. So it's obviously an exciting time for all of us.
Last question, what are your strategies in the upcoming Indian pharma market?
So again, the element to focus on consumer health as well as the new products from an innovation perspective is what we have been really focusing on. It also gives us an opportunity to take digital plus consumer and the innovation products to the markets. That's the broad strategy that is laid out. A lot of announcements that you're seeing recently are aligned, into that direction.
Biosecures, any impact on that?
Not really at this point in time.
Okay, so that's a take coming in from Dr. Reddy's. But let's welcome on board Deepak Shenoy as well. Deepak, hi, good to be speaking with you. Today it seems like it's IT which is doing a bit of a heavy lifting, whether it's LTI Mindtree, whether it's Infosys, TCS, they're all powering ahead. Would you venture a bet into the IT space yet ahead of the earnings season or not just yet? I think you'll have to unmute yourself, Deepak. Okay, no, I think there is some audio show still with him, but nonetheless, let me try and go across to Naresh to get a sense on the IT stocks. Would you be a buyer?
So it looks like a good recovery across the board. So Infi, for example, has finally taken out a resistance around that 1550 mark, has upside towards 1650. Stocks like LTI Mindtree, good enough recovery, a strong case for further moves. TCS is the most interesting one because that is consolidated around this 3800 mark for a long time. Sustaining 3920 indicates a possibility of 4100 also. So looks like a trade, but I would keep a very strict stop loss of say 1 to 2% from current prices and look for a 5% move.
Deepak, can you hear us now?
Now I can. Can you hear me now?
Yes, we can hear you. Deepak, good to be speaking. First of all, congrats. Your assets under management heard that crossed 2,000 crore.
Thank you so much. We're really small, so I know that's
I remember
a big thing for
when
us.
we first met, I think you were barely managing 100 crore.
It's been a slow ride, but enjoyable for us.
Bulk of the money coming in the last 1 or 2 years, as it always does, good big money actually comes when markets looks very hot, and they are hot right now.
They are, to be fair, most of the money I think has happened because of growth of the portfolios. The big money actually started coming in 2020, 21 when markets were starting to explode. But I guess now what happened is more you get more broader exposure. A lot of mutual funds also getting money, so we are a smaller part of that.
Smaller, nonetheless, an important part of the entire ecosystem. But Deepak, just wanted to get your views on the IT sector that we are trying to get the conversation going with. What's the view?
So I think we will wait for results, basically because the problem right now that you're seeing in the IT sector is that you're not really sure of the spends that are happening abroad, and a lot of places you're having issues, specifically in Japan and in Europe. You're having a different, more recessionary impulse there. America, you're having a different situation where spending is actually slowed down quite a bit, and then they're not actually giving you big deals. So even the IT companies in their last commentary said, listen, we're going to have to wait to see how things are. I think with especially the US, you might see more activity after US elections because, depending on which candidate comes, there will be a different regime for either outsourcing or visas. And based on that, I think a lot of more decisions will happen. I would say at this point, wait. I think markets will react as they are. The markets will just be markets, and throw volatility at you just to excite you all the time. But I think at some point we got to wait to get some reaction from the companies and see some numbers in the results.
Deepak, what has been your activity, if you could share, in the last 2 months? Have you been trimming any positions, reallocating back to some new names, or at least themes which you wanted to add and now looking good, convincing?
So we've actually moved away from a few, maybe very, very little stocks that we've kind of trimmed positions in. Perhaps at some level, we've been actually adding on to our manufacturing positions. So direct to, so if you look at the manufacturing space, I mean, manufacturing is a wide swath, but so whether it's auto ancillaries, companies in the high precision manufacturing and engineering spaces, companies in defense that are providing equipment to defense, and companies in the transformer spaces. I think this is where multiple of our themes kind of meet together. I think there's a lot more activity that's going to come here. We haven't meaningfully trimmed positions, but then since I don't have too much cash, I have only incrementally added to positions whenever dividends, for instance, come in and so on. Overall, I still remain mostly invested. We're about 99% invested, so very little cash. We've retained that over the last 2 months, mostly because honestly, I didn't know what the result of so I don't know how to predict what will happen to a market when elections or even the budget changes. So I would rather be fully invested because I don't see a near-term negative trigger from the fundamentals. I believe going forward, we'll get some indications from company results and from the budget about what sectors might actually end up being more attractive. I expect to be able to add those positions afterwards or change any of my current positions then.
Okay, fair enough. So that's the view coming in. Just wait and get the management commentaries going. In the meantime, let's just pull up Swan Energy. That stock might be reacting because the company has managed to prepay 300 odd crores. So let's see if it is reacting. But apart from that, Swan Energy is the name that I'm talking about because that managed to actually prepay some of the names. So no, actually there's a slight bit of perk up, but not really. Let me take it across to Ansh now to get a sense as to which are the big price volume buzzes right now. Ansh, it's the day of expiry. I'm guessing you are quite busy looking at the kind of volatility we have for the last 1.5 hours.
Yes, and actually Reliance will be the first stock in focus as that's the top mover, one of the top mover of Nifty actually. The stock has given a breakout from its reverse head and shoulder chart pattern, which was intact from last 4 months, and the breakout has come from that 3020 mark. So unless we don't go back below this level, the stock looks very positive. Also, the stock has touched record high level today. Apart from this, Manappuram Finance will also be in focus as the stock has given a breakout from its horizontal resistance zone, which was also has been intact from last 4 months, and the breakout is happened from 200 level. Also, the stock has touched 2-year high level, and the breakout is backed by heavy volume of over 5 times its average trading volume of last 10 sessions, indicating very strong participation in today's breakout. LTI Mindtree will also be in focus as the stock has given a breakout from its 4-session consolidation pattern, touching 3-month high with volume of over 2 times its average session of last 10 sessions. Wipro will also be in focus as the stock has given a breakout from its Wipro will also be in focus as the stock has given a breakout from its almost 4 to 6 sessions consolidation pattern, touching 3-month high level with volume of over 2 times its 10-session average volume. Also, the high potential of Hindustan Copper getting into ban list for tomorrow. So keep an eye on the stocks.
Just 15 minutes to go. Let's get in some BTST trades going. Nuresh, what are your BTST trades?
So first would be a buy on Manappuram Finance, the stock hitting almost a 5-6 year high, very close to it. Stop loss at 207, target price of 220. Second is a buy on IGL, which has been struggling around that 480 mark. Looks like a breakout in the making above 485. Stop loss at 475, target price of 500.
Kunal, what about you?
I'll go with a buy on Siemens. I think that's a chart which is looking attractive. Targets of 7,900. Stop loss could be kept at 7,600. And Jubilant Pharmova is something which has also started to get back into a recovery mode. So formation of a bullish flag pattern on the daily charts. Buy with a target of 775. Stop loss at 730.
So those are the top recommendations coming in. But hold that thought, gentlemen. My colleague Sharad is now joining us to talk to us about the dealing room chatter right now. Sharad.
Well, yes, in focus is GAIL, and the dealing room buzz is that DI selling is coming in from certain mutual fund houses. Now, interestingly, 4.8 lakh shares have also exchanged hands in the day's trade as well. And the key DIs already invested in the company includes the names such as SBI Mutual Fund and Kotak Mutual Fund. Now, the DI is holding their entire stake in the company in the mutual fund segment, if you look at it, is roughly 10.3% for the March quarter itself, and is expected to come down. And even interestingly, Quant Mutual Fund completely exited the stock in the month of May as well. Now, also analysts are suggesting that there are certain near-term pressures as well for the company, and the first one being is the higher gas prices, which is also followed by negative petrochem spread coming in. So what we are gathering from dealers is selling is coming from certain mutual fund houses when it comes to GAIL.
That's the view coming in on GAIL. But Deepak, I want to quickly talk about these gold financiers. Now, we all know that for a certain section of society, working capital means pawning the gold, right? And the easy availability of credit, etc. And it has been doing well for such a long time that even new players, even banks want to enter, new players want to enter and scale up, but it comes at a risk. Some of the companies like Manappuram and Uttur have mastered their risk management in this specialized niche. Are they, I mean, they've gone through their, kind of rub with regulator and sorted their issues. but some of these big good companies come back. Look at how Manappuram came back. What are your thoughts? Do you have any of them in your portfolio? As a lender, in the entire lenders sphere, how do you see these gold financiers?
So there is actually a very good reason. I mean, these are more like cyclical, so they keep moving, between downs and ups. And I think recently there's been an upturn, and I think for Muthoot and Manappuram, part of it has come because one of the larger holders, which is IFL of the gold financing platforms in NBFCs, has seen some kind of RBI action and therefore a slowdown in its gold lending portfolio. And these players are able to get some of that slack on their books. Banks have also seem to have slowed down a little bit of their portfolio, because the way the system works is that you need fairly quick turnaround on gold loans. You need customers come to the bank. They sometimes come from really far away places, pawn their gold. For a bank, they have to get an assayer, a machine that figures out the purity of that gold and figures out what it can price it at. Muthoot and Manappuram have got assayers in almost every branch, and therefore they're very able to quickly turn around the loan. Most banks, especially public sector, they share assayers between multiple branches. So therefore, sometimes you have to wait a day. Sometimes people have to come to the bank and then they wait the whole day and then go back without getting the loan because there was no person to assess the purity. So therefore, these players tend to get because their loan rates are much higher than public sector banks, and yet they're able to grow their business. So at times when people do need it, and the availability of unsecured loans has fallen because of RBI pressure on both banks and NBFCs to reduce that part of their portfolio, gold seems to be now slowly getting to be a beneficiary. I don't have the numbers yet because this quarter numbers will come only a little bit later, but we'll have to see. I think gold lending will increase in terms of size, both across banks and NBFCs, and Muthoot and Manappuram probably will take the bulk of the NBFC part of the lending game.
View coming in on some of the gold financiers. Manappuram clearly having a field day today with that 7% gain. But not just that, in the last few minutes, there has been an up move on the likes of JK Paper, a Concord Biotech, an Avenue Supermarts, a Thermax, a Tata Power. These are some of the names which are actually getting fired up in the last few minutes of the trading session. Just 10 minutes left. And of course, on the day of expiry, we are seeing a bit of volatility with the Nifty being above the mark of 24,000. In fact, we're at the highest point of the trading session right now, very close to 24,100, and bulk of that rally in the last few minutes. Let's see where it's coming in from, because I think it's IT yet again, which is actually doing quite well. You have Infosys as one of your top gainers. Reliance has also done quite well, and TCS, Ultratech Cement, NTPC are some of your other big gainers right now. But talking about L&T and LTI Mindtree, these were some of the stocks that we were tracking as well. L&T is down 1% in the trading session, but we did get an exclusive chat going with SNS, the head there at L&T. Listen into what he had to tell us, because he was saying that there is some challenge when it comes to the labor issues right now, but they're quite constructive on the overall economy and the kind of order inflows that they're expecting. Listen in.
I've been in this, may not have been the chairman, but I've been the managing director and CEO for the last, from 16-17, right? So it's nearly 7 years now. So what I need to do and what I don't need to do has already been existing in the company. There's a title change because Mr. Naik, known circumstances, has decided to move out of the roles within L&T. Of course, he continues as a chairman emeritus. Therefore, this position for me is more a regularization of what has been happening. So what Mr. Naik said is right. Whatever we need to do, we have been doing. It's a continuous process, not that just because you've gotten the leadership, now I have to do 10 things less and 10 ththings more. That's not the way it works in L&T. It's been a very gradual process of succession. It's been a what you call planned and executed succession. We've had a great relationship, highest respects for him. He's been a Bhishma Pita. And as I said, some people are always your chairman, and he's that. And we'll continue to take it forward from where he has given it to us, and the platform will continue to grow.
So under your leadership, we'll see some more diversifications?
It's a boring company. Okay. I don't see anything that is radical from where it is right now. Okay. We have a great platform. We have many things to do. We are in quite a few verticals. And the principal job would be to push these verticals, to take them forward for growth and shareholder value creation. That would be the principal objective. Yes, any learning, growing organization will always look at businesses to come out of because it's got commoditized or we don't want to be in that business. And we'll always look at new areas to replace them because any good organization has to keep looking out for opportunities and appropriate spaces which suits us. So that will be the endeavor. There's nothing specific that I plan to do right now.
Great. Deepak, before we thank you, just a quick word on Tata Motors. I mean, one of the commentaries coming last evening was that they're aiming at a 15% kind of a margin profile by 28. 15%, they're talking about 50,000 crore of profits at a 3.5 lakh crore MCAP. Yes, it is FY28. It could be 2 years away. But does it make it okay at 980 bucks as well on valuation front?
Well, interesting. I don't know if they will do it. I haven't seen this news to be honest, but I think 50,000 crores in profits would be fantastic for this for the company. But I guess when they say margins, they'll probably mean operating but not net. So technically, it'd be a lot lesser. And plus, 28 is still 4 years away, so we're still 24. So I like to look at it as more like. Let it happen when it happens because Tata Motors in the past has actually had a lot of surprises. So if you look at its past results, every result every year, they've had some kind of a one-timer that dampens their results. So when you have a one-timer every year, then you know that there's going to be a surprise sometime in the future. So I'd like to see them run a few years without having these one-timers. And they've done it last year, so I don't think it's out of the ordinary. But I would just take this with a pinch of salt and say let it happen. And then we'll see the trajectory going there. But this is a surprise to me, so I don't know on what basis this has been said. So maybe there's something else happening there.
Sure. No, as they say, the only thing sustainable, at least for Tata Motors for now, has been those one-offs. Let's see when that thing goes away. But Deepak, before we let you go, one of the big events for tomorrow is, of course, the bond inclusion. You also have the, Bank of Baroda annual general meeting, KIMS 2, perhaps some stock splits, Stanley Lifestyle IPO on the bourses, and then, of course, we're waiting for the PCE data from the US. But talking about the bond inclusion specifically, and especially because you track the space closely, what's your view on it? What kind of inflows one should prepare for, and what would it do to the system liquidity?
Already come in for the most part because people usually do plan this in advance. They set up their deals so that there's no surprise when there is an actual event happening. So you saw the bond yields fall a few days back to 6.97, 6.96% even. Now they're back up to 6.99 on the new 10-year. I expect that to be the primary beneficiary of it. So at best, maybe a basis point or two, but I don't think it'll fall substantially more than that. Probably $1 or $2 billion will come in or has come in anticipation of this. I don't expect this to move markets meaningfully this month, but going forward, since we're going to have flows almost every month going forward from now to 2025, this does provide a lower cushion to bond yield. So I don't think they're going to rise too much unless inflation throws in a major surprise or the budget throws in a major deficit surprise. Once we've passed that, I think we should see bond yields fall further. I think hopefully a rate cut as well towards the end of the year. We will only cut when the US cuts rates. So that will provide the next set of moves because once you have rate cuts, your bond price will probably have a higher weight in the overall index as well. That will feed in more capital into Indian bonds. I expect some of the beneficiaries here to actually be some of the public sector banks and some of the private sector banks that are issuing bonds worldwide, where their cost of capital will come down because the demand for government bonds has increased. So therefore, they get a little bit of a spillover. It's very positive for India overall, and we've just thrown a current account surplus. It's great.
Mr. Deepak, Shinoy, Nuresh as well as Kunal, thanks so much for joining us on the show. We'll thank you on that note and let you go from closing trades. But here's a quick wrap of what the markets look like today. Stellar day for the markets coming in. Nifty crossed 24,000 for the first time. Took 23 sessions to gain those 1,000 points. Sensex too hit 79,000 for the first time. Very stellar moves coming in on both of those indices. Nifty Bank, however, ending the day on a slight negative note, flat rather with a negative bias. Nifty IT has hit a 3-month high led by Wipro and Persistent. Multiple block deals on India Cements led that stock being a buzz in today's trading session. All eyes were on that stock, ended the day with gains of more than 12% on the back of block deals. India Cement has crossed 1 billion market cap today. 361 has crossed the $4 billion market cap today. So good moves on both of those stocks. Other buzzers, let's quickly pull up Root Mobile, KEC International, Max Health, PI Industries, Policy Bazaar, JSW Energy and Indus Towers. Those were your gainers for today. On the flip side, you had Indian Hotels, FAC, Paytm, Bank of India and Prestige. That were some of your big losers in today's trading session. All in all, very good moves coming in across all indices, including Nifty-Sensex as well as Nifty Mid-Cap. Nifty Small Cap slightly under pressure along with Nifty Bank. But that's how we've shut shop for today. Thanks so much for watching Closing Trades.
If you like this video, then like, share and subscribe to ET Now.